All right, we got a big panel to sort of kick all this off. Kelly has made her way to the set as well. We got Francis Donald, chief economist at RBC Capital Markets, David Waddell, Waddell, an associate CEO. We're joined also in D.C. by Steve Leisman, who is there to do the Fed minutes. But, Steve, this news, I think, pardon the pun, trumping the Fed minutes, at least for now. Rick Santelli's in Chicago, and Eamon Javers, who is at the White House. And Eamon, you were the one on Monday that sort of squashed this 90-day tariff talk by actually, picking up the phone and calling the White House. You moved markets on that. As you heard from Megan, this one is real. It appears to be a wholesale change, at least for 3 months, by the president. And I think, and please, if I'm wrong, tell me, this is a big win for the Scott Bessent wing of the White House.
Yeah, that's exactly right, Brian. I can tell you I was in the West Wing when this social media post landed by the president, and it was a bit of a quiet afternoon until that moment. And then suddenly everybody's phones and screens lit up with this post. It's a long post, so as people were reading it, it took a moment to digest exactly what the president was saying. And there was real surprise in the West Wing, at least among the people I was standing with, that this had happened. Now, those are not necessarily the people who would be in on the highest level conversations, to be sure. And what we just heard from the Treasury Secretary, Scott Bessent, is that this was a strategy that dates back to Sunday night. He said he was with the president on Sunday night. Remember, Bessent traveled to Florida, traveled back with him after his weekend in Florida, and was here spotted on the colonnade by reporters on Sunday evening. Bessent says that's around the time when he spoke to Trump, and they came up with a strategy of letting the tariffs go into effect and then putting a pause into place. So this has been a closely held secret, if that's the case, here at the White House for some days right now, as the entire world was reacting to the president's tariff policy. The president knew at all times that he was going to do this, according to the version that we just heard from Scott Bessent. He also laid out sort of the rationale for this. Here's what he said.
I think what we've seen, I think the willingness by more than 75 countries to come and negotiate, I think now the market understands that everything they saw last Wednesday was a ceiling, and now we have a 10% the temporary floor. And I think the market, my 35 years in the market, I always wanted certainty, so I think we've got more certainty.
So, Brian, you see this relief rally happening in markets now since this post went up on social media, and you heard the Treasury Secretary there talking about the idea of getting more certainty. But the scenario he's laying out is, not entirely certain, right? Because what you're looking at now is 75 separate trade negotiations with what they say are 75 different countries. He said each one of these negotiations will be bespoke. The president wants to be involved individually in each one of these negotiations. And so that means there could be 75 different outcomes in terms of trade with individual countries around the world. And that sets up a future over the next 90 days where we could be getting announcements, status updates, and the like on as we go along here on all of those different negotiations. So for people in the global marketplace, that's going to be tricky to follow, and there's going to be a lot of ups and downs between here and there, Brian.
Eamon, appreciate it. Don't go too far. Eamon Javers at the White House, where stocks, the Nasdaq's up almost 10%. We have individual parts like the airlines are up 20%, Robinhood's up 20%. Some of the retailers are up 20%. Absolutely levitating here. Let's turn to Francis and David for some context. And Francis, maybe you can take it first. But what do you think is going to be the net impact as the dust settles from the announcements we've had, the market reaction, and now trying to still figure out the economic effect of 125% tariffs on China?
Well, look, the economist game in the past few weeks hasn't been point forecasts. It's been scenarios. And when you ran those scenarios, when you saw something like Liberation Day, 20% average import, that was really consistent with a recession in the United States and some pretty high inflation. But we also ran a 10% across the board. That's not exactly what we have here, but it gives you a framework. And what you see in a 10% across the board, well, it's still problematic for growth and it's still higher for inflation, but it's not that same sort of deeper formal recession type of call. So some relief, I think, in a lot of economists' forecasts right here. But I have to tell you, Kelly, if you had told us last week that we were going to have a 10% across the board tariff wall around the United States, that still would have been a painful impact to growth. It still would have been material downgrades, a lot of inflation. I also have to say 90-day pauses are not an eradication of tariff risk. So companies are still going to be looking at uncertainty, and a lot of companies around the world waiting for what their individual negotiations will mean for the United States as well. Underlying all of this, we've still had stock market volatility that might impact sentiment and some consumer behaviors as well. So it feels a little bit of a relief here, but I have to say 10% tariff is still a massive reordering of U.S. trade and global trade, and certainly is not an eradication of the risks that we had seen in the past week.
David, I've heard some sort of theorize, and there's going to be many theories about all of this, but that one of the president's rationales here may be to get the budget deal done, right? They have a very slim majority in Congress at the House. They have vulnerable Republicans running for re-election. They're up against a constituency who's clearly alarmed about some of these new policies. Does that give them just enough breathing room to get that across the board, and at least maybe then provide some ballast if they do come back to this policy, and who knows if they will at this point?
Well, obviously the tax cut's a huge deal, and we need that to occur. Whether you can use the tariff revenues to offset in the budget reconciliation
I don't mean
process,
specifically.
I
just mean in terms of political.
Well, majorities have their privileges, right? And so the Republicans can use that at least as a talking point. I think two major things were revealed to us in the last 15 minutes. One, Bessent does not like a 4.5% 10-year Treasury yield. Like, I'm sure at midnight he was sweating that, and that's probably what walked into the Oval Office and said, we've got to make a change.
She wants lower.
Yes.
Much lower.
Yeah.
I tweeted out this morning, and it wasn't like me just tweeting my feelings. The market was screaming for change.
Yeah.
The market was going to push for change, David, no matter what.
Correct.
And
that
when you
was the
see
leverage.
stocks move and bond yields move in the same direction, that was the leverage that Bessent needed to convince the president that Navarro was wrong.
That's what I think happened. And I think he walked into the Oval Office and said, we can't fund this thing at all if we're going to have these come unmoored. Because $600 billion comes into the United States from foreign purchasers. They own $8.5 trillion in treasuries. If they go on a buyer's strike, then we just start having these yields levitate, and none of this stuff happens. So I think that was the panic button. Number two, China's the problem, right? I mean, if you look at China's share of global manufacturing over the last 20 years, it's really come out of the U.S., but it's also come out of Japan. It's also come out of Europe. And so we know that the 10-year is the leverage to get the deal done. We also know that China is the main focus of all of these negotiations, and rightfully so. So I think those are two huge bits of information in what had been a huge information vacuum.
Steve Leishman in Washington, D.C. Steve, I know you were there to cover the Fed minutes. The Fed minutes are out, but obviously this is kind of superseding a lot of that. The Fed is looking at all this data, and kind of to Francis's point at the top of the show, it appears that the data now, tomorrow and the next day, will be different than the data we would have gotten earlier this morning or yesterday. How hard does this make an already nearly impossible Fed's job?
Can I say more nearly impossible? Is that a good answer?
I think that's correct grammarly.
I mean, not a laughing matter. Obviously, this is good news that the president backed off these tariffs. It's bad news, as one of your earlier guests said, that these 10% tariffs. Remember, Brian, we were down trillions of dollars on the S&P going into that Rose Garden announcement because the market hated the tariffs. And it's interesting to think where the market would have priced that day had the president announced just 10% across the board tariffs. Remember, that makes us one of the most highly tariffed countries or the highest tariffs in the developed world, higher than Europe. And of course, the president, as we know, made up those tariffs. And now he's increasing the Chinese tariff that he made up that they charge us, which is obviously a separate issue. But let's talk about.
It's not, because that,
Yeah.
Steve, as I understand it, and by the way, please, if anybody out there knows that I'm wrong, let me know, because Kelly, I'm just winging it here. The China tariff, as I understand it, is still there. I think
still
the
there.
comment was
It's
the
higher.
pause will be on tariffs for countries that don't reciprocate, but the EU just reciprocated. So I don't know.
Steel and aluminum.
The steel and aluminum, I don't know.
That's where I was going to go, Brian, because here's the question I have. If you're an investor right now, if you're a business person, what probability do you put on the idea that tomorrow there could be another tweet or another tweet after that? I think that business would feel let me give you an example. I broke a story this morning that the Treasury was meeting with Wall Street former Fed and Treasury officials to discuss the idea of a sovereign wealth fund. That's a process by which you can come to a policy that then can be understood by Wall Street. There was no such process in the tariffs here. He made up the tariffs on the day of the tariffs, or maybe the night before. And so you still live with this fear that over the course of the next 90 days, it comes back, the tariffs come back, you still have this 10% tariff. Look, things are a whole lot better than they were with these other tariffs that were in place. But you just have to be careful. You will forever have this idea of the policy that can come on at any moment with any tweet, unless that process changes and somebody like Scott Bessent were to get control of the policy process in a way that is understandable and predictable. Do what you want, Mr. President. Just let us know that you thought about it. Yeah, and it's the right policy, and it's going to stick around for a while so they can figure it out and invest on it.
And I know we have Rick there as well. Rick, I'm not leaving you hanging, but I got to go back to Francis on Steve's point. I think Steve makes a great point as usual, Francis. Your job is you're not making political sides. You're there to model, as you said earlier. I'm there to model what I think is going to happen. Bessent said, well, we're going to get more certainty. Businesses hate uncertainty. He's right about that. I don't know if he's right about the more certainty now. As an economist, you're modeling. Does a 90-day anything give you a certainty in modeling? My physicist friends would say no, but they're crazy.
Well, we can put a number in an Excel spreadsheet and now start it 90 days later. But what it does is it reduces the probability of the most severe scenarios. And I think the most important thing that I heard in the last hour was when Bessent said 10% is now the floor. We told you the prior situation was the ceiling, but this is the floor. So when you're modeling these types of exercises, you're now putting a different probability on these types of scenarios. Now, it's imperfect, and that's why you have to be transparent and have a lot of humility and understand the upsides and downside risks. Uncertainty is the biggest unmodelable downside risk to any economist's forecast. We don't always know how it permeates through the system. We know higher income household Americans and CEO uncertainty is probably more problematic for the economy than lower and middle. But also, Brian, I've never had this level of uncertainty related to Washington politics in my forecasts in my career. And for a lot of business owners and a lot of households, they haven't seen this level of uncertainty either.
Yeah. David, anything you'd add?
No, I just think a lot of people, as you mentioned, had already discounted the fact that we probably would see a 10% tariff, and maybe that hangs on because we created the External Revenue Service, so I guess there'll be something there. And then the negotiations with China are going to be fascinating. The only way for China to get out of the box is to increase the value of their currency by 30%. That's the only way to get outside the box. And by the way, the reason we run trade deficits is because we're richer than everybody else, and because we're exceptional, our currency value is higher. So I don't know how all those rip-off rates come back to the floor after all this. I think you're at 10%, you're at China, and we'll see what happens with these other negotiations, but it's really about China at this point.
Yeah, and what are the impacts of that? I mean, normally we'd still be talking about that's a major area where there's consumer exposure, could be a major source of inflation. I mean, it's all
Yeah, I think the inflation is there. I mean, whatever I was getting ready to order to put on my wall to watch this in higher def, I may have to put that decision off and see what actually happens. And I guess, I don't know how many iPhones Apple shipped in yesterday via big airplanes.
Right.
And so we're just going to have to work through that. The play with the Chinese is never to do these things out in public. You got to do them in private. Whether those negotiations start progressing or not, I don't really know. But I think the 10% tariffs are here to stay.
Well, Rick, with all due respect to David's television, a lot of people may be looking for a place to put that TV, which would be a house. And for a brief moment of time, we saw mortgage rates collapse as bonds got bought, yields came down, mortgage rates collapsed. Not anymore.
Mortgage rates didn't collapse. They didn't collapse.
Okay, they
Would
declined.
they go down? Yeah, not much. They were never below 6%.
No, you could probably find a high five somewhere if you bought down the rate a little bit. My point is that now we're back to 7%. We got a 10-year that's at 4.42. What's the bond market?
We have $37 trillion in debt. The last guest said, "Oh my God, the capital account. We need that from foreigners. We're just such a rich country. We're rich. We're the boiling frog." You know what nobody talks about? Everybody's talking about the capital account. All this money that the trade deficit puts in the surplus countries that gets recycled in buying our debt, that robs us of any feedback loop that, hey, you used to be rich, now you're beggaring everybody by borrowing so much money, but you don't feel the pain because the trade surpluses overseas in China and Japan, it keeps coming and recycling. And now we're in trouble? Listen, we've always been in a bit of trouble, and in my opinion, we can't let those that own our debt end up telling us what tune to play. So if you look at it from that perspective, maybe what the president's doing isn't how you would do it, isn't how I would do it, but it really is more about results. And as far as companies and uncertainty, tough.
Yeah, it's well said. The bond market, though, David, is moving. The bond market appears to have been moving. Usually it sort of leads the stock market. Oil, guys, let's throw oil up there as well because oil was below 60. And I want to point something out that's not getting as much attention because everyone focuses on Trump in the U.S., and that is yields. The bond market moves, David, were the same around the world. I think Peter Bookfart said this to you, Kelly, right, in the exchange?
At least if you look at the countries that they had, it was Japan, it was the UK, it was Europe, it was Australia. So you can either read that as it's not just us, or as Dramatis kind of suggested, you could read that as, well, that's a lot of the Western kind of trading block that China might or another, might be upset about. So there's a couple different ways to read that.
But it was fascinating because it shows it wasn't just the U.S. problem, David. So I guess my genius question to you is simply what the hell happened? What happened the last few days? Is there a way to explain to we got a lot of non-pros watching CNBC right now, okay? They're scared, 401ks are down, 529s are down. What happened?
Well, I mean, I don't know. I'll tell you tomorrow when I have time to think it through. But
I think I don't know is probably the most honest answer
but here's the thing.
We've ever gotten on CNBC.
Right. Well, all right. So people have their long-term asset allocations. They should be set up. So strategically, the long-term asset allocations always bake these things in. So the dollar was down, 70 basis points when I woke up this morning. So where was that in the linkage as well? I think it's going to take a while to do the autopsy and figure out, yesterday I had lunch and I heard a couple of guys talking about a hedge fund pain and the basis trade, and I think that was part of it too. But in terms of how to apportion responsibility for that move, I don't know. What I do know is that, as Rick said, we're 25% of the world economy. Everybody else is 75%. If they go on a buyer strike because we do rely on their capital, it is going to create some upforce, whether it's perceived upforce that generated selling or it's actual upforce that leads to lack of buying. I don't know, but the perception was clearly that we were creating a large problem, and I do think that was the pain point that sort of facilitated the press conference.
Rick, what would you add?
Here's what I'd like to add. Whether it was COVID crisis, credit crisis, Tide Bet, tech wreck, long-term capital, and all those, you couldn't call a timeout. Say, okay, COVID, the markets are crazy. Let's do a timeout. Let all the markets come back and regroup. But we did a timeout here. And the Dow's now up 2,500. The NASDAQ's up 1,500. My point is that this is really different this time. There's no timeouts in a real crisis. And technically, the economy really isn't much different than it was a month ago. I understand the uncertainty and the fact that all the data might be different, but that's something to think about. The other thing is, where all the action's been the last hour and a half? In 2-year notes. At 118, a 2-year note was at 368. It traded to 4%. Okay, that speaks volumes about how the Fed has a very small role in what's going on.
Well, Rick, wouldn't that tell you that they perceive a much stronger near-term economic outlook because the tariffs because you back down?
I just think it's people that were looking for the Fed to somewhat intervene. That's changed. I don't care what the Fed funds market says. It doesn't necessarily mean it's going to come to fruition. We've seen many false starts. I really do think it's readjusting that the Fed is not the salve here. This is all about what's going on in the West Wing, and it's about isolating China. I think the Treasury Secretary said a lot of things I might not necessarily 100% agree with, but one thing I agree with 1,000% is you could see who the bad and good actors are based on the last several days and who is going along with trying to negotiate and who isn't.
And Rick is making a very critical, correct, and important point. And I want to say this to our audience. I tweeted out earlier. If you are seeing price hikes that people blame on the tariffs, they're lying to you. They're gouging. The tariffs they kicked in yesterday. Okay, now we had solar panel tariffs from the Biden administration. We had EV tariffs from the Biden administration. We had Trump tariffs 1, and some steel and aluminum tariffs about a month ago. So I guess if you're building a pipeline or anything involving a lot of steel, your prices may have moved. But for anything else, the retailers are gouging. I want to make that clear. That out of the way, now that we've done the public service. Because I think it's important, Francis, to tell people the tariffs kicked in yesterday, right? Or midnight.
But tariff would have kicked in on Saturday, I believe.
So, but there's no time for any goods that you're buying now.
And that's a small number.
So,
Brian, this is the point, which is that you can have tariff policy. You can say it's a means to an end and that we've won a victory here. But there is damage to this economy because tariff policy and the president doesn't control the economic actions of all agents across the entire country. We know from past experience that when prices go up, other companies take advantage of it. We know that when tariffs are put on and then taken off, the companies don't then remove those prices. So there is actual change as has happened in this economy.
Repeat that. That was critical what you just said.
We know that when companies have tariffs applied and those are then removed, that not all companies then drop the prices after the fact.
Why not?
Because they're taking an opportunity in the economic environment.
So you're saying that capitalistic organizations might act in a capitalistic manner?
Absolutely. And if you're a capitalistic organization and you're in uncertainty and the stock market has created this volatility, you may pause decision making. So we're looking at tariffs as a revenue generation, but we also have to remember that this uncertainty, if it weighs on growth, and by the way, it will, and 10% tariffs will lower growth, that your revenue from everything from employee taxes to business development, that's also going to fall. So to say that we've removed this risk now or we've lessened it and therefore we can all breathe a sigh of relief, I think we may be underestimating the impact that flows through in these tentacles for the economy. We're still better placed now than we were last week. There's no question. But to say it was an on-off switch, I think is misrepresenting how this is going to go through.
So there's no off switch there. Yeah. Hold on for a second, David. Steve, I want to get you back in here because I know you've done extensive work on this, and we're going to go back to such shows as, like a week ago, where the 10% tariff, because we're still trying to figure this out. So to Francis' point, this 10% blanket tariff, do we have any idea how much of that will actually flow through? The price of stuff that Steve Leisman buys is not going up 10%. Somebody's going to eat it over here. Somebody's going to eat it over there.
Right.
It's going to be a couple percent, right?
What's really amusing, Brian, is you caught me. I was looking in my email file for whatever modeling I might have had from the Wall Street economist about a 10% tariff. I think Goldman, a few other folks, I can't find it right off the bat. My recollection is it shaved something like 0.2 over GDP as opposed to, say, 0.8 or 0.9, which we saw was the modeling of the current tariff. So quite a bit less in terms of economic impact, still negative. And I don't know if it was 0.2 or 0.3 on the upside when it came to prices, but much less than the current ones because the estimates I saw for the most recent tariff regime, the one of a few minutes ago, was like a percentage point on GDP down. Sorry, almost 2 percentage points on GDP down and almost a full percentage point up on inflation. So those seem to be gone now in terms of what's going to happen. We don't know if there's actually going to be any negotiation away from the tariff regimes that exist for other countries right now. We don't know if the 10% tariff can come off or that's now a permanent regime. I guess Wall Street would breathe a sigh of relief. But, I mean, here's the question. Did we have to go through what we went through to get where we are now? I guess we'll debate this. The historians will debate it for a long time. But I'm sure a lot of people are saying, what? Really? This is what we got? For what?
Well, it creates a pretty amazing one-day move. I mean, the Nasdaq's up 10%. You have United up 25%. Delta, one of the strongest names in the S&P 500. David, that's now, people are going to go, I didn't get in maybe on Thursday. And by the way, a lot of people did. And we talked about this. A lot of retail investors got in when the market first started selling off. What do you do now?
I mean, it was hold your nose and buy. Right. And so it was a coiled spring. I mean, every single technical indicator, all the VIX, all the moving averages, everything said, hold your nose and buy. And I've been at this for quite a long time. The best day to buy is the day when I can't tell you why you should buy anything. Right. Yeah. And that day was basically yesterday. And then at midnight, it just got even worse. Well, so it was a coiled spring. But one thing I'll add about that.
Well, hold on. I want to stay on that point, and I want you to add it. But I want to follow up on this. Yeah. I think you're making a critical point. OK, the CNN fear and greed index was at 4 out of 100.
Yeah.
Correct.
Okay, everything was awful. And that's the lesson here. And the market, who knows, tomorrow it may fall 10%. I don't know. To Kelly's point, JP Morgan Chase is up 10%, Morgan Stanley up 12%, United Airlines up 25%. Today, Walmart, best day in 5 years, up 10%. But it's a good lesson that you never try to time the market, right? Because the people that sold yesterday are now, who knows what will happen tomorrow, But for today, they've missed it. And I think this is a critical lesson that the best single days in the stock market generally come in fearful and uncertain times. I don't know a lot, David, but 30 years of doing this tells me that.
Well, and furthermore, if I have a client who calls and said, I can't take it anymore, I'm going to sell, I say, fine, what's your buy strategy? Right? And that's where they typically get tripped up because I feel bad, so I want to sell. But if you can't articulate why I would get back in, what the trigger would be to get back in, you should not sell. Right? And so you got to do two decisions, not one.
Fair enough.
Your clients, some of them, I think, might be looking to sell into this rally, right? Like they're down, they've made a little bit of money back today. What's your advice on how to approach a day like today?
Because I got to take a break and I got to call them. So for the clients, the way that
got 12 and a half minutes left in the show. Give us the 12 and a half minutes. We appreciate it.
Yeah, okay, I can do that. So my view of it is, again, the asset allocation has been set, right? We, as discretionary managers, de-risked the portfolios a little bit coming into this year because there was so much policy uncertainty, right? Then you get the downdraft in the market. The question is, what do you do with that? The way you make lemonade out of the lemons is you do a little tax trading, right? So if you've got positions that are down, you can sell them, you can harvest the losses, but you reposition in the same asset allocation as you had otherwise. And again, a lot of our clients are still generating capital, right? So cash builds up in a little bit of a reservoir.
Yeah.
The way that we've been telling them to deploy that capital is when we get to sentiment extremes, because this is a sentiment-driven market, not a fundamentals-driven market. So if the bullish sentiment on the AAI gets below 20%, we buy. We put some money to work, and we use those sentiment extremes as opportunities. And, you know, this is a great snapback here, and Jim mentioned it. This is longs coming in. This is also shorts covering. To what degree, to what proportion, I don't really know. Is this over? It's not. It feels super good right now, but there's going to be more back and forth, and China's going to have something to say either subtly or publicly. So the volatility is here. We have to figure out ways to use it until we get to close. Well, I think you're right, Brian, to zoom out a little bit. We are in the midst of a technological transformation. So even if, and I know what the models say, if there's a 10% tariff, then we subtract 0.4% off of GDP. If productivity growth is going to be 2% or so, and we hold labor force somewhat constant, you're starting at a 2% level. So even if we deduct, you know, 0.5% for tariffs, I'm not saying that's the case, even if we do, there's still GDP growth there, and all of this productivity coming into companies makes them more profitable. So we expected profit margins to rise. Now, tariffs may offset some of that, but we are in a special period of time where technology is the really big story. This stuff is sad as it may sound, I think nibbling around the edges. I think we're in a very prosperous period of time. We don't need policy to run amok, but the base case is prosperity here. But the proxies came back online, right? So now it's a 10% tariff for Cambodia, it's a 10% tariff for Vietnam, it's a 10% tariff for Laos, right? And so there is also a saying in China, which is that the mountains are high and the emperor is far away, right? And
but
so
I don't
business is going to find a way.
I don't think Trump is going to go to Beijing, and I doubt that Xi Jinping will come to D.C. or Mar-a-Lago. But let's say, David, as an investor, we get a headline that says Xi and Trump to meet in wherever it is.
Positive.
But that they're going to be, right? Does the market rip higher because now at least they're talking to
Yeah,
Michelle's
because that's the big
point.
game. That's what this is all about. And I think before, with all these rip-off rates, they weren't really reciprocal tariff rates, it made it impossible for China to figure out how to route the water around the stones. Now, you know, they can, and so it just reveals that this was about China all the time, I think.
So just by imposing that 90-day delay, is it a political move here as much as anything? I mean, who knows, right?
But that'd be great because he's got to have it. You know, otherwise the question is are the midterms important, right? Or is it about winning 4 years from now? Is it about the continuation of the MAGA movement 4 years from now? You know, this morning I woke up and thought, well, this really is all about reindustrialization, and maybe they're willing, as a la Reagan 1.0, to sacrifice the midterms to win the White House back. Unclear, but even in that scenario, they had tax reform that was passed, right? It has to pass. So if this levers that up a little bit more, then that's better for the agenda.
Tesla's up 19%. Does that? What did you mutter? I heard you mutter. That's crazy.
I'm looking at airlines up 25%. These crazy moves.
That's what that was my point to Kramer.
I'm just saying,
Did United Airlines business prospects go up 25% today? Did they go down 30% the last week? I don't think so.
It's been binary. It was either going to be the largest tax hike in history at 30% on the tariffs, or it's going to be the largest tax cut in history because now it's free and open trade all over the globe.
And there's